Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
You're watching Stockwatch. I'm Zinati Guma, and joining me to unpack your stock-related questions today are Zwelakhe Mnguni from Benguela Global Fund Managers and Lwando Ngwane from All Weather Capital. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, lady and gent. It's been quite interesting to see the markets today. The JSE's in the red. Most of the US markets are in the red, and even the European markets are quite mixed. And I would think that everything is in the market's favor. You look at the Fed cutting interest rates, Xi Jinping and Trump meeting and reaching agreements in very, very important areas. And I'm wondering, Lwando, just starting off with you, what is keeping the markets, I guess, on the back foot at this point?
Thanks, Zinati, and thank you to your listeners and viewers. I think the market is very volatile. I think we're in a space where, the historical drivers of, the markets in terms of fundamentals are sort of no longer as prominent in the system. So if you think of COVID years where, everything sort of shifted and you had a lot of algos coming into the system and a lot of this AI sort of data-driven stuff that drives a lot of the market moves. I think partly it's owing to that. I think also maybe owing to flows as well, because if you look at the case of our markets, you may find that sometimes, a company comes out with earnings and, it beats in terms of consensus expectations. But because of the flows and maybe just like the positioning in terms of foreign investments versus local or domestic investments, it tends to move in the opposite direction you'd expect it to.
Okay, that's actually very, very interesting what you say. I think I'm also going to dig deeper into that, particularly when it comes to one specific company, and that's Datatec. Zwelakhe, just coming to you, I mean, one of the catalysts has been the big tech earnings. We did have 3 of them releasing results last night, and markets are quite disappointed with Meta and Microsoft, but actually pretty pleased with Alphabet was able to produce. And there's actually been, a rally, before these results came out. We saw Nvidia hitting $5 trillion in market cap, Apple $4 trillion. And I'm wondering just how worried markets are about these specific results that did come out last night. Oh, Zwelakhe, I think you are muted.
I think one of the things that drives the markets or has driven markets this year has been the expectation of rate cuts. And I think what we saw after what Powell said, I mean, the market immediately reacted to that there might not be another rate cut. And I think that is the theme. But I think if you look at the performance of the businesses, I mean, the top lines are not bad, other than what we saw with Chipotle. The top lines are decent. I mean, these companies, especially the Mac 7, they're growing quite decently. There was a wobbly on the Meta side with the tax and a little squeeze in the margins. But broadly speaking, I think the earnings story is still solid so far, even amongst the likes of Nvidia. I think the big question is whether there will be a rate cut to continue supporting a favorable momentum or risk-taking, if I could call it that. So that is one of the factors. And I think on the SA side, I mean, the gold sector, if you strip out the gold or the precious metal sector, it's been quite a tough environment for the South African stocks. So we've seen an improvement and we've hit some highs, but it is largely because of the precious metals. And the SA Inc. side still needs to demonstrate earnings growth, good execution at strategy level. So we are having a few of those, but broadly speaking, a positive environment. I think we might have a bit of a tailwind with the December rally.
Yeah. All right. Well, as we're talking about tech companies, Lwando, just quickly on your side, because I mean, you have some of these companies where investors have been disappointed. You've seen the stocks plummeting about 8%, and you know, I even saw that one of them, I don't know if it's Meta or Microsoft, reached record revenue. What exactly is it that investors are looking for here, where it seems that there is a disappointment on those companies?
I think investors, you know, they run ahead of the market sometimes. We have to admit, I mean, even if you consider the likes of what happened with this whole renewable or green energy move, you sort of saw a trend where investors, the theme was sort of running ahead of what was practically possible. So in terms of the investment environment, you'll find that investors will go in ahead because, you know, we always forecasting what's coming in the future. And sometimes you take it, extrapolate it to, you know, as far down as 10 years. And if you find that the investment community is overly exposed to a certain sector because of the growth story behind it, you know, then any sort of, you know, messaging and then the report that comes out that does not please the market and makes it a bit, you know, concerned, then you find a bit of an overreaction in terms of the share price moves because of that.
Yeah, and it's actually quite interesting just, you know, digging deeper into what Lwando said early on about flows and some of these companies actually not having a lot of those. And I think Datatec is one of those because they actually put out really good results. Zwelakhe today, the CEO, called the performance outstanding. But I didn't see, I think at some point I saw that share down about 2%. I think it ended off just slightly in the green. What do you make of this company, especially in a time when there's a lot of optimism around these tech companies and seeming that they are in a good position to benefit from this AI move?
I think certainly it is one of the companies that could benefit from this AI move in that as they implement services to these companies, I mean, there is an opportunity for them to benefit quite significantly. I didn't check what the share price did today, but I think the execution has improved significantly in the last few years in this business. We've seen them after the sale of some of the assets that they had in South America. I think we've seen quite a meaningful improvement in their execution. So yeah, I think from a outlook point of view, I'd probably be positive that they would be able to participate in the AI wave. But I have to caution that, I mean, if you look at some companies, the consulting element of these type of businesses, it looks like AI is replacing some of those elements. If you look at Accenture, for example, they've struggled to actually gain traction as a result of AI, and they've chosen to cut people to be able to gain traction. But I do think that from a services point of view, this would be a great environment. But it's just a question of whether you package it with consulting, as that was the model in the past. You do consulting first, and then you provide the services that relate to what you advise them to do. So the consulting element might actually be, the leverage might be gone for these players.
Lwando, I know that Shane does like Datatec. I'm sure that is the house view. Just talk to me about, because I mean that share price has run, but do you think that the numbers that they are producing actually align with where the share price has gone?
I think, you know, we do like Datatec, and I think the big uncertainty around it before today's print was just, you know, management trust and just the clarity in terms of the consistency of earnings. And we are sitting in a position where we are pretty comfortable in terms of, you know, getting more consistency and more, you know, stable profitability going forward from this current print. The top line was pretty muted, but I think the big highlight, you know, was the 43% growth in earnings. And like I said, showing a bit more stability and probably gaining some investor confidence just over time if they continue to deliver. And I think also the other uncertainty was around the, you know, Logicalis business. And I think just from today's print, we probably have a business that will be reporting, you know, cleaner earnings, which the market may appreciate sometime down the line.
Yeah. Well, sticking to tech still, more fintech. Optasia, of course, is the big buzz because they are due to list on the JSE. I think it's next week. So there's a question here: is Optasia a buy, and should a retail investor participate in the book build? Zwelakhe.
Not a company that I follow, so I wouldn't ever comment on it.
Okay. Well, a lot of people didn't really follow it until they said they're going to IPO, because a lot of us know it as part of Ethos Capital. Is this one that maybe has come to your radar, Lwando, at any point?
Yes. So it has come to our radar, and I think given, the first round's 20% purchase at 19 Rand per share, it did draw a bit of investor interest. So we like it. We think it's an attractive and differentiated growth story within the context of the South African market. We like the niche business model. I think they've identified a massive gap in the market in terms of the lack of credit for the unbanked, sort of demographics. So it's offering microloans. It's also diversified in terms of its geography, and I think they do have a bit of growth levers to pull in terms of growing the loan sizes. So yeah, we do like the story, and yeah, we did show an interest in it.
All right. Zwelakhe, any kind of fintech players on your radar? I mean, you're looking at Optasia, but then on the JSE, we also have a small company like Capital Appreciation. Is fintech at any point one that you would have appetite for, even if it's offshore?
Yeah, it's a difficult area for me. I mean, I think the barriers to entry have been decreasing in that area, where the ability to create an app and technology, for example, if you run in merchants or you creating e-wallets somewhere and you distribution, the kind of things that the likes of Blue Label do. I think that kind of space has become a bit competitive, and you blend it with the financial and the lending, I think it becomes a little difficult for me. But I do think that there is space for it. And I mean, we own, for example, Mercado Libre in South America. So it's not that we are averse to it completely, but it is something that I'd be very cautious about, and I'd want to see that the company has got a very strong competitive position, and there isn't a lot of players that are challenging it.
All right.
But the likes of, for example, Lesaka, they've been making inroads and buying other smaller players. I think we're going to see a bit more consolidation in that space.
Yeah.
Potentially, Optasia could be one of the participants in the consolidation story.
Okay, very interesting. Let's get into more questions that the viewers have sent. And I actually want to start off in the commodities. BHP, for a few, had a few dividends negative over last 5 years. Worse than Anglo's, up 79% in 5 years, even with diamond issues. No, Mr. Henry, please advise. Okay, it seems that the viewer thinks that BHP has not been in a good position in terms of giving out dividends, and Anglo's is in a better position, even with the diamond issues. What would your, advice to this viewer be, Lwando?
So I think in the market that we're in, we tend to sort of gravitate towards quality names, just given the volatile nature of the market. And if you look at BHP and you compare it to Anglo American, one would say, Anglo American, if you look at the history of the management, it's a well-run company. And then you look at its portfolio in terms of commodity exposure, it's a little more diversified than BHP. So that tends to protect it relatively better than BHP when you have some commodities in a down cycle while others are up. And I think that sort of cushioned it relative to BHP. And then even if you consider, some of the production updates that came out early in the week, Anglo's put out quite a strong Q3 update, and it's rallied on the back of that, driven by, iron ore, ministry, and some guidance in terms of the production outlook raised. And I think they also also just simplifying the portfolio. So you tend to find that when a stock has a story behind it, it will generally outperform one which is sort of, consistent and, not much excitement behind it. So I think that could possibly be the reason behind the outperformance.
Okay, that's actually interesting. How would you be comparing BHP and Anglo as Anglo moves to merge with Tech Resources, Zwelakhe? I think even then BHP will still be bigger?
Yeah, it would. But I do think that, BHP's exposure to iron ore is quite a big problem for us. I think it is excessive, whereas Anglo's has tilted now more towards copper, especially after the merger. So I would think that henceforth, I'd probably be inclined to take Anglo-American. BHP's iron ore story would face some challenges because of the China situation, where some of the exports might not get out of China quick enough to create a suction power on iron ore to be brought in. So there was also a bit of a tiff between China and Australia around the iron ore, or at least the exports. So there is an element of pressure on the iron ore price because China wants to buy it at a discount, or at least at the spot price and not contract price. So there is that challenge at the moment, but I wouldn't want to be too exposed to iron ore at this stage.
Okay, I hear you. Let's go into AECI that services the mining industry. The question is AECI a buy? I think the last time I actually looked at the AECI share price was when the CEO resigned. I think even with immediate effect, haven't actually looked at how the share price is going. But it seems like AECI is coming along with its whole strategy revamp. What would your approach be to AECI, Lwando?
AECI is another one that we like. I think generally, if you look at the commodities markets, they've been strong, which supports the company's mining business, and that makes about 56% of its sales. We also like the chemicals business, and we think it should be seeing some decent demand in terms of AECI's growth focus regions, like Australia, SADC, West Africa, and Indonesia. It also has lowered its debt, its leverage following the disposals. And I think the only concern for us is the fact, the one that you mentioned, the fact that, the CEO sort of left the company abruptly. And it was at a time when he was executing on strategy. So I think that does create a bit of uncertainty in terms of execution risk for us. But otherwise, it's trading at an attractive multiple if you look at it relative to its 5-year average, and also offering some growth. So we do tend to like such stocks.
Oh, okay. Lwando, bullish on AECI. Your take, Zwelakhe?
Yeah, I'd be a bit cautious, primarily because I think it's riding on the coattails of the mining sector, and depending on whether this music continues to play on in the mining sector, we may see them continue to perform. But it's a cyclical business with a high fixed cost base across the board. So I would be a bit cautious that we've had such a phenomenal period in the mining sector, and potentially if we see a pullback, these companies would pull back on their capex, and we might see them struggling. But in terms of the ongoing run-of-the-mill mining, they're well represented. They're getting good traction in that space, so they might be able to hold up a little better. But I think it's a cyclical business. The pricing might come under pressure if we do see a pullback in mining.
All right. Well, let's get into property. I don't think you look at these specific stocks. Transparco, SA Corp, and Visual Real Estate, I think they might be too small. If you don't follow them, Lwando, Zwelakhe is already shaking his head. If you don't follow them. Lwando, would you have, or do you have any exposure to the property markets? And I guess what would be your preferred picks there?
We do have exposure to the REITs, maybe not necessarily Transpaco or SA Corp,
Yeah.
but we like, the REITs. I think they've generally had a strong performance in terms of the market. If you look at it relative since last year, I'd say, and it's obviously been supported by the rally in the 10-year bond. So we've had the yield compressing from about 12% to around 8%, which has given support to some of the REITs. Just some comments on SA Corp. It focuses on retail, industrial, and I think some low-cost residential assets. And the yield sits, I think, around between 8 to 8.5%. But if you look at the LTV, it's around 41%. So I think in this environment where you have rates falling, it will tend to, perform well. It is, however, quite small. I mean, the market cap is 9 billion, so I think it comes with liquidity risk. Not too familiar with Transpaco, but from my understanding, it's a packaging company with significant exposure in terms of plastic packaging. And we've had polymer prices coming off a bit. So it's one I would assume would benefit in terms of the lower input costs. But from a top line perspective, I think, one would probably need some economic growth to come through to get a better support in terms of the sales line.
Okay, there I learned something new. Transpaco is not a property company, it's a paper, plastic and packaging. Yes.
One of the oldest as well.
So thank you for educating us there, Lwando. Zwelakhe, any preferred picks in the property space?
I'd probably still go with the safer, relatively speaking. Growth Point probably the larger players in the REIT space. So storage, those kind of businesses. I think I'd be cautious about the smaller ones, and I'd also be more cautious on those that are exposed to retail. I mean, and office in particular. I think those two areas. Retail is doing a little better. If I had to rank the three areas, I'll probably go industrials and retail, then office last. I mean, if I could avoid office, I would.
Yeah.
So those would be the areas, but I agree with Lwando that, I mean, the compression of the rates has been positive for them, and they should see some relief on their interest line.
All right. Well, it is that time. Let us get to your stock picks. Lwando, where are you finding value today?
I actually wrote a Business Day article on this stock, my top pick, Astral. I really like Astral. I think there's a good story behind it. It presents a lot of upside from current levels. So it is a cyclical play, but it's coming from a period where, everything went wrong. And now, as things stand, it sits, everything is moving in the right direction for the company. So it put out a voluntary trading update for the full year yesterday, and guided to, growth in the full year headline earnings to be between 5 and 15%. And it had a tough first half where earnings fell 46%. And this was following some heavy promotional activity in terms of chicken prices in the retail market. We also had high yellow maize prices at the time, which peaked at around 5,000 Rand per ton. So if you consider sort of the midpoint of the guided range, which would be around 20 Rand a share, it implies that this business grew its earnings up by above 50% in the second half, which we believe, is the first signal in terms of the earnings print that it will be reporting next year. And what's driving this performance are three things. Firstly, it had an increase in terms of the broiler slaughter volumes. So volumes are up. Secondly, poultry prices are up year on year. So we have IQF prices showing an increase ranging from low to mid-teens. And then thirdly, input costs are relatively lower versus last year. So yellow maize prices in terms of future prices are sitting comfortably below 4,000 Rand a ton for the most part of this year. So I think it's one that, has a solid investment case, and, just given the tailwinds in terms of the company's drivers, also historically known to be a good dividend payer. And I think it's also trading at quite an attractive multiple, around 6 times. Which is lower relative to its history.
All right. Zwelakhe, where are you finding opportunity?
I'm with TSMC. The the foundry business in the semiconductor space. I think as we see CapEx being ramped up by all these hyperscalers, they're going to need to throughput some of, or a lot of that through the TSMC's manufacturing side, where they manufacture all these chips for them. So I think that it is a less risky element in that they're getting volumes guaranteed by the hyperscalers, but they don't have to go worry about monetizations once they produce the product. So it's doing fairly well. I mean, trading at a discount relative to the likes of the other semiconductor businesses. I would go with it thinking there would be some long-term momentum in their production and pricing power.
All right, well, there you have it. I do want to make an announcement that this is my last episode on Stockwatch and on Business Day TV. Thank you to our viewers and our analysts for always holding space for me in your workplaces and in your lounges, and you will always have a special place in my journey. After that sloppy message, thanks to our guests on tonight's Stockwatch, Zwelakhe Mnguni from Benguela Global Fund Managers and Lwando Ngwane from All Weather Capital. Up next, The Close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.